Let's talk about why technical analysis works, and it works very, very well most of the time, but not every time. And so we'll get into that a little bit and kind of the underlying concepts around technical analysis when you're looking at a security. And a lot of it gets back to that whole idea of supply and demand, right? If you have a lot of demand for something, the prices will rise up. You know, if somebody really wants, a whole bunch of people are buying a certain product, for example, you know, the person who sells that product could raise the price. Same thing with trading of a security. If there's a lot of demand for a security, the price will rise. And so what this leads with the supply and demand, it leads to predictable behaviors. If we start seeing certain patterns or certain things happening, we can anticipate that there's going to be changes or things that are going to happen that are as a result of that supply and demand. And it's been around a long time. I mean, it's been around since like the first time it was ever talked about in the book I read was in 1948. So it's not something that's like just brand new that's never been really proven or tested. It's been used for a very long time. In fact, some things like candlestick price patterns and all that have gone way back, hundreds and hundreds of years back in Japan. But certainly the term technical analysis, certainly since 1948, and many different things around that and proving why that works. But not all the time. So let's talk about what's the idea behind this. And one way to think about it is how people will travel together, or people will invest together, or traders will get an idea and they'll kind of start moving together, right? And that's kind of what we think about as trends, right? Think we're all kind of moving the same direction. It's almost like a herd mentality, right? Okay, so I'm not going to say that people are like sheep. Okay, people are not sheep. Okay, but it's the idea of a number of people or animals traveling together, going in the same direction. So like if you look at this picture, for example, you could see that the sheep are traveling in a certain direction, right? They're headed downhill on a road, and it's nice and easy for them to walk down the road, and they're all kind of headed in that same direction for the most part. You can even consider that momentum investing, right? And we'll talk about momentum indicators, where they're all kind of headed in this easy trend going down the road. But you might also notice something that's going on that's a little different in the upper left. Do you see the little grass there on the left? And there's a few sheep who went on the grass that, hey, this looks pretty good over here. Let's go over here and have some grass. Now, they're not following the trend. Like if we were investors, we might say that this is a definite downward trend, right? Look at how everything's kind of moving down the hill, and it's easy to move down the hill. But we'd want to watch what's going on that hill over there, because that might be what we would call in technical analysis a breakout or a changing of the trend. And is it going to be a real breakout? Is it going to change the trend? Are the sheep going to change their direction and now go to the hill? So if we think of this as terms of a security, let's say prices have been falling, going down the hill, but now something's happening, something in the news or people are just for whatever reason are changing that supply and demand, and they're going to now go on the hill and the prices are going to start to rise. So if we have an indicator that says, oh, when certain things happen, people are going to start changing, the prices are going to start rising, kind of the idea of just like we see enough sheep that go up on the hill, the sheep will change direction too. So maybe it's a breakout, maybe a trend is forming, maybe it's just a retracement, which is another term for just a temporary move where it kind of goes up for a little bit and then comes back right away. It's a temporary move. So we're going to learn all about that. So that's the underlying idea of why it works, because it's looking at these big kind of macro type trends. Now, it doesn't work every time because, one, nothing's 100% perfect, of course. And then there's unexpected random events that can occur. And these random events could come at a company level. Let's say the CEO unexpectedly dies or gets fired or something happens. There's something that could happen at a company level, or they miss an earnings announcement unexpectedly, can drive prices up and down. But then things that can happen at real big country or global levels too that are really beyond our control and even beyond our analysis, because something really unexpected happens. I mean, if we think about something that was really a big unexpected thing, or that had a certain shock to all the security markets for a time being, was like COVID-19. Remember back 2020, we had COVID-19. And if we look at this chart here, if you go on the left, this represents prices. Amazon's in the blue for Amazon as a stock. And then we've got on here Norwegian Cruise Lines, right? So cruise ship, and we've got the S&P 500, like 500 large USA stocks to just compare them. And if you look to the left, you can see how the lines are together and how this represents prices. And so they're all kind of trending together as far as the prices. And then in February and March, becomes known that COVID is really going to be a problem, becomes a global pandemic and gets announced that way, and governments start talking about it in that way. So it sends all the prices down, no matter how good a stock is or how good a security is. It sends everything down because there's this big unexpected event. Now, once the event happens, then things change or can change. You can see where people look at Amazon and say, whoa, wait a minute. In a pandemic where we can't get out and we're locked down and we need goods supplied to us to our home, maybe right directly to our door, where are you going to buy from? Amazon. This is good for Amazon. And as you can see, Amazon's price took off for the rest of the year from that. S&P 500 rebounded a little bit too, and actually finished the year up a little bit. But if you look at Norwegian Cruise Line, they went way down and hadn't recovered at least during the year of 2020. A little bit of recovery, but not a lot. Because again, this unexpected event had a bigger impact on them. I mean, who wants to be on a cruise line when you got a pandemic? And you remember the early stories about COVID-19, it was people trapped on cruise ships and they couldn't get home, and COVID was raging. So you can see the impact that this unexpected event happens. So sometimes it happens, and you're going to learn about how we're going to put in built-in protections and things like that to limit our losses, like with stop loss orders and things we're going to learn about, and how we can recognize these trends so we can get out quickly to its technical analysis about buying at the right time, but also selling at the right time and avoiding big losses like that. So again, nothing is 100% foolproof, but having an exit strategy really helps. If you had no exit strategy with Norwegian Cruise Lines, you rode that way down, like I think it was down 70% or something like that. And if you're, like, say, a buy and hold investor, which is different than trading and certainly different than technical trading, you can suffer through that. And then you just don't get out. You don't get out soon. You try to ride out the storm. Now you see Norwegian go down so far. It's going to take a longer time to ride out that storm than, let's say, Amazon would. So, but with technical trading, the idea is that I'm actually an active trader around that. So another thing with technical analysis too is it doesn't tell you how much to invest. It tells you with indicators and things whether you should invest and how, but it doesn't tell you how much. We'll talk a little bit about some money investment strategies at the very end of the course too to help you with that. But the actual indicators and things don't tell you like, oh, if I see this price bar or I see this moving average go like this, I should invest X number of whatever of my money. It doesn't tell you that. It just tells you what's happening, and then you decide what action you want to take on that. So technical analysis is terrific, been around a long time, works, but not perfect. Nothing's perfect, right?